All right. I think we're live. Okay, thank you so much for the wait, for those who've been waiting. There have been some issues with the OBS starting this very Saturday call. So let's start with the DeFi universe. Just a quick segue into this. We looked into it just out of curiosity. So we look at TVL's on Ethereum. 21 billion, Lido is 19 billion, EigenCloud, EigenLayer therefore is 10 billion, Sky, which is MakerDAO, is 7.5, Binance Take TTH 7.5. So we can see, some pretty like huge TVLs. We see finally Tether Gold at 3.2 bill, which is quite significant. It's been on the first page for quite some time. Now Uniswap at 2.2 billion. Now remember Uniswap, the go-to thing with V3 and V4, but below this, just below Uniswap is actually Curve with V2 designs. This whole DEX curve actually originated from Curve, right? That's why it's called Curve. So interestingly enough, at 1.6, Curve is not that much behind Uniswap. And there are a couple of lessons here, right? That we may see some of these lessons are wrong lessons, maybe some wrong inferences, some are correct. But overall, one of the things is maybe V3 and V4, maybe optimizing for institutionals is not necessarily a good thing long term. Definitely a good thing short term. Uniswap definitely earned significant amount of fees by switching to Tether and Circle, but nobody apparently the users are preferring Curve more and more over Uniswap. Curve significantly went up in its TVL. Okay, so you've never heard about Curve, most of you guys, right? Like most of you guys don't even know what this is. These are the actual legends, right? That originated the entire DEX revolution back in the day. Okay, that's TVL. That's cool. Those are top TVL protocols based on TVL dApps, therefore based on TVL on Ethereum. Now, another interesting thing here, and again, this is just super quick analysis without diving deeper. Maybe DeFi Llama is producing wrong information here. Who knows? Definitely possible. Let's go for the revenue 1 year. Okay, revenue 1 year presents a slightly different picture actually. So Sky with MakerDAO, which is a decentralized stablecoin that is going to be frozen potentially. All the KYC nonsense, etc., will likely be implemented very soon. It's a derivative of DAI, right? So all of a sudden, that's 250 million revenue per year. How much of that is profit? Well, I would say significant share of that is profit. Significant share of that is profit because it's just lines of code and maintaining, potentially updating for some vulnerabilities, and also going for the DAO. Now, Sky is a significantly DAO managed type of situation. Now, whether the DAO is good or bad, that's a separate story. But Sky is DAO managed, it's MakerDAO, right? Like MakerDAO. That was the initial thing. Aave, 100 million of revenue per year this last year. And Aave is also known to have significant DAO activities. As we discussed it a month, maybe a couple months ago, the Aave DAO is not just strategic, but also operational, right? So operational issues also discussed via that DAO. And we can see, some correlations that the two are, so the Aave is a borrowing lending protocol, Sky is a stablecoin. So we can see some demands here, like what market wants, because the market is paying those fees to those dApps. Now, Lido, so Titan build is actually RPCs and infrastructure. That's quite interesting. Did not really look into this at all prior into this project, but that's interesting. It's mostly on Ethereum. It's mostly helping produce blocks, and that's mostly RPCs, right? So as we observing the need for the RPCs, notice how that's not Infra and Alchemy. Infra and Alchemy actually do make significant bank, right? But they are not decentralized projects, so they're not dApps. They're just centralized providers of the infra, which are also multi-billion-dollar unicorns. In terms of market cap, as far as revenue, we don't have that info. I think it's still privately held. Well, Lido is here, okay, which is a restaking. Now, interestingly, Chainlink is here at 36 mil, providing mostly price feeds. That's they also do CCIP. We'll see how that works as far as the cross-chain bridges. Uniswap Yeah, it used to be at the top 33 mil. That's another lesson. Optimizing for, for institutionals, probably good in the long term, but in the short term, you get what you desire, right? You desire institutional adoption and you get the institutional adoption. Thing is, crypto is not for institutions. Like all this RWA stuff, like, and by the way, RWA is tether gold, right? Like it's, where's that? We don't, somewhere, right? It will be somewhere for sure. But I mean, here we go, like 5 million a year. Not bad, to be honest. Like it sounds pretty like not necessarily doesn't sound high, but it's not that bad. Like 5 million a year for a project is okay, but for Tether Gold with all this massive connections and stuff, and obviously that's the founders of Tether, right? Not necessarily very very promising. Tor chain DEX, right? So that's and Tor swap, those are 5 mils, right? Like higher than the Tether Gold. So those are essentially kind of competition for what Ghost will be doing with the bridges. Not that decentralized. Definitely better than most other protocols like Layer. Oh, by the way, where is Layer 0? Oh, by the way, yeah, where's that? That's interesting. Where's EigenLayer? Where are all these bridges that have 74 validators, limited to 74 validators, therefore, right? Don't see them really here anywhere. So, so that's the situation. Okay, good or bad, that's just is. So again, couple of lessons that I personally see from this. First of all, we need to, especially amidst geopolitical conflicts and even more significant attempts to, for the control, and the control will only be enhanced and increased. Why? Because governments need money. Here's the thing: all those conspiracy theories that sounded crazy 5 years ago before COVID are absolutely, most of them absolutely confirmed. Like, it's so weird, but they are confirmed, right? About the fact that the cannibalism, even that is confirmed. Like it's absolutely fucking crazy, from the Epstein files in particular. So, like, when the Bitcoin maxis were saying, hey, the currencies are going to be inflated. Well, they are being inflated. For example, in the US dollar, the inflation of 2% that has been okay for the last 40 years, I believe, from 1980s, now is switching to the new norm of 3% per year inflation. And if that sounds like a tiny increase, it's a 50% increase in inflation. It, of course, has lots of massive reminiscences and impact on the global economy. It will. The 3% versus 2% now, the Fed is not rushing to drop the rate, given what's happening with potential inflationary forces associated with the oil price increases. So that, of course, will have a massive impact on everything else, including all the assets. All assets will start growing higher in dollar terms, obviously, including gold, including stocks, including crypto, if 3% is indeed a new norm. Because again, it sounds just from 2% to 3%, just 1% increase, but in reality, it has so much more massive leverage type of impact because the world is massively in credit and it's massively leveraged. So, and when you look at fixed income instruments and all types of swap instruments, specifically interest rate swaps, that 1%, oh my goodness, it will have such an impact on the notional amount and therefore have such an impact on the overall kind of asset increases globally. But it's not that the life is going to be better. The economic situation across the globe is going to be worse, and we entering, from a couple of decades of insane growth, we entering into a couple of decades of contraction. And yes, they're trying to kind of keep the market from falling with AI revolution. The next is probably going to be robotics or whatever, but it's not. I don't think it's going to work. The stock market is actually down year to date, I think 4 or 5% already, S&P 500 this year, despite inflation. Okay, the money printer will definitely go brewer, and then I think even despite that, the stock market will be showing weakness, as well as many other assets such as gold. Gold just dropped 7% on a day 2 days ago. Same thing with silver. Significantly kind of improve. On the strengthening of the dollar, because the Fed decided not to drop rates. So that was a weird trade, but it happened. What I'm trying to say is, like, it's going to be more and more control. And while 90% of the nations of the countries will be, kind of going towards that, over control of the controlling of the population of the populace. The 10% of nations will always exist as a competition, right? So, for example, Argentina used to be very pro crypto, and then Milei, with kind of the impact from the US, pulled from the BRICS. And now I think crypto in Argentina is kind of more or less way more trades than before, right? So Argentina still crypto friendly, but not as crypto friendly as it was two years ago. I believe I mentioned the case of Paraguay. Paraguay, super, like, nobody knows. Most of you don't even know where that country is located. Doesn't have access to the ocean, no coast access. It does have rivers inside. It's one of the largest exporters of electricity in the globe, due to the dumps on the rivers. They do export it to Brazil and Argentina, and therefore Bitcoin mining has been quite spectacular in Paraguay. I personally know some people out there who are directly involved in mining industry within Paraguay. But a week ago, Paraguay introduced a law that if you trade more than $5,000 per year in crypto, you have to report it. You have to report every single trade, $5,000 per year. And of course, you have to kind of trust with your private info, and that applies to not just to centralized exchanges, but also to anything DEXs, anything private wallets. Now, you don't have to report; they have no way to enforce it, but the law is the law. So if you want to be an obedient citizen, kind of need to report it. Now, of course, you report it to a system that is potentially very weak, right? So Paraguay population of 6-7 million. Like, what type of security do they have for your information, right? Very, very slow. Now, what happened though is the reason why that happened is because U.S. maybe due to due to motives of training the military forces, put boots on the ground. So actual military came into Paraguay, and then massively within a week, the law has been passed, right? About the $5,000 reporting potentially being forced by the U.S., right? So the country has been great, definitely a tax haven and also a crypto haven for many expats for many years, actually. And then literally over one weekend, there's a massive outflow of expats out of Paraguay. So what I'm trying to say is, like, Argentina was great, Paraguay was great, no longer. But then we have other countries. We still have Panama in the South America. We still have El Salvador to some extent, although there's still massive impact from the U.S. and massive influence on the U.S. But then we have some other nations, right? Like outside. So let's assume South America is done, as U.S. is understanding that controlling the globe is going to be very challenging militaristically. So how about we at least do not lose to South America? I think that's what's happening. That's as well as the reason with Venezuela's capture of the Maduro president. But there are other nations, other parts of the globe that are still, becoming crypto friendly and will become more crypto friendly. In particular, it's going to be Middle East. Yes, currently definitely, experiencing some issues. And Iran and Afghanistan are very, very close nations and, kind of dangerous nations at this moment for anybody outside of Iranians and Afghani. Therefore, but who knows? Maybe in 10 years they will open up, and maybe those two nations will become, kind of the next crypto havens. You still have the Middle East, you still have UAE, you still have Saudi Arabia, you still have Bahrain, you still have Oman. Those are pretty crypto-friendly nations. You have African nations. I'm pretty sure that the likes of those nations that do sell passports right now, Sierra Leone, Botswana. A couple of other nations, they will probably become Mauritius becoming more popular, especially after Paraguay's closeout. Then we'll have in Asia, Thailand to some extent, Malaysia to some extent, Cambodia to a larger extent, very, very crypto friendly. Of course you have the general suspects of Singapore, right, which is amazing banking and very stable and still offering 0% capital gains on anything, including cryptocurrencies. So you do have those spots on the globe that will still be crypto friendly. And although there's massive control incoming, right? Although there's KYC incoming, what we will see those little dots on the map, or maybe large dots on the map, where crypto users who still vouch for privacy, who still want to get the merit for and reward for thinking financial independence, they will be flooding to those nations and therefore bringing capital with themselves. And that's why those nations will be opening up for crypto, which is again privacy oriented and self-autonomous, etc. So that's the trade. And yes, you can be optimizing for institutionals all you want, but here's the thing: like, despite all these laws that just came out of the U.S., for example, that hey, like, let's now Bitcoin is not a security, now it's a commodity, or Ethereum is not a security, it's a commodity, still being taxed as as capital gains, still being taxed. However, there are certain laws that like, oh, you can now do an ICO up to 5 million, if I'm not mistaken, up to $5 million dollars, and then you still do not need to register with the SEC. So some positive news coming out, but are they really that positive? Because at the end of the day, you still need to, at the end of the day, they're still trying to mix, something private with something completely self-reported, completely tracked, completely traced. Like, what's the fucking point? Now, of course, the massive advantage of that crypto, even if you when you report it, is due to the fact that it's kind of self-custody. But since you report everything, including your personal information, such as your address, your phone number, everything about yourself, social security number, you can be, physically traced, physically, right? Physically kidnapped, physically, robbed, for that flash drive, or, for that book where you keep all the passwords, right? So it's a pretty dangerous situation. And of course, those who want and value, those libertarians that do value financial independence, of course, will be flooding out. And if you think that this is just a joke, the governments don't have money. The governments will try to do anything to confiscate under whatever premise. And then good luck proving, in court that, that you're not the fool. Good luck proving that you're right. The crypto will be most likely confiscated, probably sold or stolen, like it already happened, right? The son of the FBI agent decided to show off and took the stolen bitcoins, right? And bravaded with stolen bitcoins, as son of an FBI agent that for some reason had direct access to the flash drive with confiscated bitcoins. So the stuff is already happening. Forget about privacy. Forget about norms, right? Norms and values. Nobody has norms and values because economic situation is deepening, worsening. And the lesson from those DeFi protocols that I'm sharing are, listen, like, it's a proof that those revenues could be earned. Again, the profit margins in those revenues, I believe, very, very high, probably in the 90s of percentages, like maybe 80%, maybe 75%. Like, it's not 20%. No way it's 20%. It's just lines of code. So the profit margins are massive. And if those protocols are, do have that vision for creating some type of decentralized governments down the road, or decentralized nations down the road, that's going to be a very good start for those who do have, this profit engine to then, buy island, buy some access to protection via military and try to have those more or less decentralized nations. I think Paraguay, wanted to be that. Panama wanted to be that. And Paraguay lost. We'll see what happens to Panama. El Salvador, to some extent, is winning, at least currently. So Cambodia is winning currently. So that's going to be an interesting play. But it's also kind of the hope is there. So, is it possible to make $36 million per year? Well, yeah, it's possible. Yeah, Chainlink is doing that. Right? Is it possible to make $78 million a year for a protocol? Yeah, it's possible. Lido is doing that, right? So, is it possible to make more than that if you have proper utility? Yes, that's the whole point. Like, these protocols do make a lot of money. There's a myth on the street that Web3 protocols are losing because nobody's really making money. Well, they are making money, right? Like, Uniswap, name me a software company that makes 20 million in profit. Okay, like, name me that, because this revenue is really almost like profit. Now, of course, you have lots of startups in traditional Web2 space that make a lot more billions in revenue. How much of that is profit though? How much of that is sustainable? And with all this like traction about let's capture the market share, blah blah. What about the profit? Here we have more or less real profit. Okay, more or less all of this stuff is real profit. So that's very interesting. Okay, that's on the side of just overall DeFi. And of course, if utility for on the Go side is seen by other users, then we could move mountains. Now, what we would like to cover outside of, by the way, let me just show Solana really quickly as well. So check out Solana, like, with all our hate towards that, ecosystem, and the desire for Solana to say that we are institutional. Pump.fun is number one with $500 million in revenue, and of course, most of that is profit. By the way, maybe not necessarily profit with Pump. Why? Because there's massive marketing, I believe, associated with it. But I still believe it's high. It's probably 50% plus as far as margin. Now, $500 million, let's see how sustainable it is. But with all this, talk about how Solana is for institutional investors, well, Pump is purely for degens. Axiom is similar. It's just for degens, right? It's this trading protocol, like with leveraged perpetual futures. Like any respected VC will not be trading, or any respected hedge funds will be very, very cautious about perpetual futures, given insane leverage and zero control over what could happen to the price levels. So, like, that's a degen play, right? So, we have top two protocols, which is degens. Significantly, by the way, overshadowing what we see on Ethereum, which is quite interesting. Of course, it will be interesting to see if this is sustainable. I don't think it is. But it's just another proof that institutionals is not the right angle, right? It's the retail, which is the right angle. For crypto in particular, because it's a crypto freaking play. It's a crypto self-custody play. It's a self-independence, autonomy, financial independence, etc. So it's very interesting. Now, Binance, finally, actually not that bad either, surprisingly, because, I'm under the impression that Binance is just dying out. But it's not necessarily the case. Pancake Swap, which is a kind of fork of Uni with some things, is 100 million. That's a Binance, 100 million a year revenue. Of course, most of that is profit. Meme, I'm assuming that's very similar to Pump.fun, 83 million a year. Not bad. Kind of instigating more interest to launch on more chains, actually. Because I was under the impression maybe it's Ethereum and Tron and that's it. But, we look at Binance and Pancake. I mean, listen, if this is real trading volume and it's not subsidized by the Binance team just to show good numbers, just the stats, if this is real, it's definitely worth bridging to Binance. Because we'll be obviously, bridging to Binance and then interacting with the Pancake Swap as a partner. We don't have to ask the permission. We can just integrate our flows through it because it's public smart contracts. Okay, that's this. Now let's get to, if you guys have any questions about DeFi, please ask. In the meantime, let's dive a little bit deeper back into the tokenomics of ghostDAO. Has direct impact because we are redesigning it. Sleepless nights, all-nighters, including yesterday, the day before, probably today as well, about how can we capture the user's interest? How can we, to some extent, maybe optimize certain flows, or maybe not? Before we talk about the, certain optimizations that we have in mind, maybe if I have time, we'll show some sneak peeks of the things that could be changed. Let's not forget that the biggest difference between Olympus DAO, that's the model 3,3, which is very famous meme, right? So we have stake 333, that's the one. The reason why it's a 3,3 is because it's a 3 stake bond sell versus stake bond sell. So those 3 actions on the x-axis versus 3 actions on the y-axis, so it's 3,3. Now these are the payouts from game theory. In case of on the x-axis we have user 1, on the y-axis we have user 2. So user A, user B, right? Let's call them that. So user A, if user A decides to buy and user B decides to buy, then it's a 3,3. Why? Because both the users are pushing the price higher, and that's the rough impact on the protocol 3,3 as far as the impact. Now, of course, if they both sell, it's -3, right? And if it's just a stake and sell without the bond, then the matrix is evening itself out. It's 3,3, -3, -3. -1, -1, 1, 1, -1. So it's just 0, 0. Like overall, it's just a 0, 0 impact. Now the bond though changes it all because the bond introduces this positive. It changes the whole protocol game incentives from neutral to positive. Neutral meaning completely 0, right? Which evens itself out to positive. So here, for example, when I stake and you bond, you stake, you push the price higher, but I'm bonding, so I already have a discount, but then you're also pushing the price higher. So for me as a bonder, it's actually beneficial for you, for user A to stake while user B, me, is bonding, right? And same thing here, right? So that's interesting. Now this one is supposed to be 1-1. It's a mistake. So when both bond, just 1-1 for the protocol, and then of course that's 1, -1, 1, -1, and it becomes slightly positive due to bonding. So that was the Olympus kind of innovation here with the bonds. Now our innovation is 4-4. Now, of course, you will see lots of forks of Olympus. Back in the day, they did 4-4, 9-9, whatever, like some crap stuff, not substantiated by much. Ours is substantiated by the fact we actually have a separate function called bridging. You actually can bridge, right? So now we have stake, buy, bond, bridge, and sell. And bridge, for the most part, is massively beneficial. Massively beneficial. It adds even more positivity to the neutrality, right? So the reason why is when you stake, for example, and I bridge, what happens is if you push the price higher, but I'm bridging, and I'm bridging through, and when I'm bridging through, I'm bridging through something that is being staked, but also that is being pushed higher in a price level, right? So I'm getting a 3 benefit from this as a bridger, and you get 1 benefit as a staker, right? And then all the others are, for the most part, kind of, like these ones kind of neutralizing each other. This is 4-4. And this is 4-4 if we have one chain. So if we have one EVM, right? We have, let's assume Ethereum, and we have Ghost Chain. However, that model significantly multiplies, and like you can kind of read all these explanations. This model significantly expands when we introduce another blockchain, another EVM, let's assume Binance, right? So we have Ethereum, so this like little cycle here, 3,3. Then we have Binance, 3,3. Then we have, 3,3, 3,3. Then they're connected through this cross, right? Through the sacred cross of the bridge, okay? Almost religious here. And that changes the thing. Significantly, I'll demonstrate this to you via the chart. Now, of course, when we introduce a third chain, for example, Avalanche, the cross is expanding further. It's becoming bigger. Now it's 10,10. So every single new EVM connected will be adding to the model. 13, 16. Okay, so what? Okay, it's adding. So what? Well, so if you look at the model risk allocation, you will see that the 3,3 has 11% risk. But 4,4 significantly minimizes risk. Why? Because the number of negative outcomes, so let me just show this, right? So when you have 3,3, you have 1/9 of a negative outcome, right? It's 1/9. Everything else is neutral, but specifically negative is 1/9. But when you expand this to 4,4, now it's 1/16. So your risk model is improving, right? So the risk is just 6% here versus about 11% here, right? And then when you add more chains and therefore expanding, into 7, 10, etc., the risk is mitigated. The number of negative outcomes here, right, is becoming smaller proportional to the number of neutral and positive outcomes. So you're minimizing risk, right? So you're minimizing risk here. So from 11% down to 6, okay? But most importantly is you are also increasing the payout distribution, like the positivity. So how that's calculated is just to take the average of these outcomes and just average them out, right? Compared to how many cells. Like essentially, what is the average payout per cell? Since this cross here is helping, you will see that while for Olympus it's 111% profit, for full model is 150. Then it kind of drops off a little bit, right? Kind of drops off, that's sure. But while it drops off, the model is becoming still more sustainable because you have a lot more diversified access to chains, right? So what will end up happening is, yes, the payout will likely kind of reach 111 as we have more and more chains, right, down there. But the risk will be potentially increasing to 11% as we have more and more chains. Because as we add more chains, the impact of the bridge is kind of, getting smaller. But that's mathematically. On the game theory level, though, the system becomes so much more stable because you don't have just one chain. You have all the chains, all the EVMs working together to make sure that the risk is being diluted, right? What risk are we talking about? The bank run scenario risk, when users massively leave the protocol, like massive exodus. So that risk is diluted across multiple blockchains, multiple EVMs. So that's something very interesting, and that's kind of the value add, right, for the protocol. And of course, it's powered by bridging specifically. Like the biggest change is bridging. Okay, so since that's the biggest risk, we thought about what is, and then also our previous discussions about how the governance of Ghost DAO shall potentially be moved inside of Ghost Chain as well. We thought about this, and it's like, it's a philosophical type of question of what activity do we want from the user? What activity is the best? what activity from the user is the most desirable? And the more we think about this, the more we realize that it's not arbitrage, which we thought initially. Arbitrage is when you go from Ethereum to Mortar, because Mortar has better prices. Like in particular, on Mortar the price right now is $237, right? So I can buy it here, then go to Sepolia and sell it for $535, right? So that's we thought was a desirable scenario. Is that possible? Absolutely. Can users do this? Absolutely, right? Once we have the bridge out, the user will be able to take advantage of this, like double that money within like one trade, right? Because you buy on on 237, sell like more than 2x higher, maybe 2.5%, maybe 250% upside. But that's not the most desirable. That's definitely very desirable, and that's perhaps the second most desirable on the list. What is the first most desirable activity we would like to get from the user? It is bridging in. When the user gets to bridge in and not leave out of the Ghost chain, so essentially the user gets to the Casper on Ethereum, and then he bridges in to the Ghost chain and stakes with a validator node or a nominator node. That is the best for the protocol because all the liquidity is situated inside of the Ghost chain. We suck in all the liquidity inside of the Ghost chain in a decentralized way. Not only that, but we are opening up massively all the bridge outs to anybody who wants to take advantage of the arbitrage. And the good thing about arbitrage is the model then becomes stable. When this price stays at 530 and this price slowly gets to 530, and that's exactly what you guys are seeing here. Like this price is slowly getting to 530. That's what's happening. So once all prices start stabilizing themselves, then we get a very good bridge. But that bridge is market driven, based on supply and demand that do control the treasury, pools that will be powering those bridges, right? So very, very different from any other projects that call themselves bridges, who control those pools themselves, like in a centralized team way. So what does the user get though from bridging everything into the Ghost chain? Well, they get double staking. So they get obviously the stake on, say on Mortar, they get the stake of 69%. Okay, well in this case 67, we need to rebase is really 69% here. And then they get the stake of the bridging. Now the bridging staking is about 1,000% since we launched it so far. So 1,000% APY since if we annualize it, it's about 1,000%. Now, of course, it's not sustainable. I don't think 1,000% is sustainable. I think realistically, as I mentioned many, many times, probably 30% will be very much sustainable. Listen, 30% in real terms, so no inflation, 30% in real terms, on top of the 67% of this. So we're like, oh, and then we spoke to some of you guys, whales, and I think you guys confirmed it as well. Like, oh, double staking. Like, in particular, one person said, like, I've never heard of any protocol doing double APY. Like, it just doesn't exist. And it's like we thought about this, well, subconsciously, I guess, and then we're like, oh, interesting. So not only it's beneficial for the protocol to have, bridging in, essentially sucking all the liquidity inside of the Ghost chain, but it's also very beneficial for the user. The user gets double staking. That double staking, again, is originated from single staking on the eGhost, on the eCasper, being driven by bonds and DEX fees, and the second staking on the bridging side of things, which is the total revenue, right? No dilution here. So therefore, we're like, oh, interesting. So maybe we should be playing the aspect of double staking across the board. Like maybe the flow of the user shall be to essentially demonstrate to the user the benefit of the double staking, which is not happening right now. Because right now you go to the dashboard and you don't even see okay, you see these numbers, but what do they mean? And then if you want to get to the staking, you need to click on stake, see that APY, question it maybe for the first time. After you sleep over on this and try it with $1 and see that this APY is real, you're like, oh, let me do more. But this APY is kind of hidden, and maybe that is not maybe we're not playing this up much. So let alone we're not even playing double staking, okay? So double staking is just a term. But if you want to get access to double staking, you go to the bridge. Okay, you go to the bridge, that's fine. But where's this double staking here? You see the bridging fee, 6.9% that you have to pay. By the way, 100% active validators. Kudos, guys. Kudos to all the validators who validate. Thank you so much. This is fucking great. But we don't see double staking anymore. By the way, good morning, Mr. Adike. Sorry. And User access, double staking will be a huge marketing ploy, and we need to use hate heavy. Exactly, that was your feedback, and we're using that. Essentially, thank you so much. Thank you so much. That was coming from you, from that night that we had a call on. So, definitely inspired by this. So thank you for that feedback. So, but we don't, like, you guys just bridging, like, we're all bridging, but we're not bridging for the sake of freaking, getting double staken. But you do get double staken, right? Every validator here gets double staken. Every nominated gets double staken. So we thought about this, and we're like, oh shit, like, we kind of need to do bridge out, okay? We need to do bridge out. That's a complicated thing, and we're doing this. We definitely need to work on the bridging fee function, which will change this, make it more variable. We definitely need to work on Ghost Chain governance, right? To kind of move this governance onto the Ghost Chain. By the Motor had 2 successful proposals already within a week of its launch. But we also probably need to rework ghostDAO a little bit, one more time. And since our lift capacity is limited, we add more hours by not sleeping. So, but I think it needs to be done. And it needs to be done faster than we think, right? So since we're adding this new component of the user interfaces, because the governance needs to be moved to the light node, the bridge needs to be, these components of the bridge need to be moved to the light node nicely. Ghost Connect and light node need to be reworked to some capacity. So those are difficult things on top of what needs to be done. Now, of course, we don't have to do them, but I think we have. I think we should, okay? So let me demonstrate some of the sneak peeks of the designs that we're thinking about. And maybe that will be interesting for you guys to see. Let me see, 1 second. Let me share. Yeah. All right, so do not judge them too much, right? Like, they are highly experimental still. Those are not final designs yet, but maybe close to final. So first of all, by the way, Proposal 11, the next change is going to be launched soon. Hoodie, Pulse, or Chiado. Chiado is Gnosis, Pulse is Pulse, Hoodie is Ethereum. Please vote, and also provide your feedback, like why you voted. So far, just JML Freedom provided. Thank you so much, JML Freedom. Thank you, really, really appreciate it. Everybody else who voted, if you guys voted, please provide your feedbacks. Do some research. If you have already voted, you can re-vote, right? You can retract your vote and then vote again. Would be interesting to see. I'm purposely not voting yet. I need to see what you guys are thinking, because I do not want to sway vote in any way by my vote. So I'm purposely kind of delaying my election. But please, please make your choice, okay? It's going to be between those 3. So we'll have 3 chains at the same time with the bridge out. It's going to be Sepolia, Mortar, and then one of those 3s. And therefore, we have to have 3 RPC endpoints, right? Okay. Sneak peeks. So first things first. This is going to be most likely the landing page. Something like that, okay? That's the impression. Now, those percentages are single stake percentages, not double stake percent, just single stake. The idea is to kind of wow the user by single staking. Because, yes, Mortar at 69% may sound not too high. But listen, where else do you see 69% in the world, right? You don't. Okay, so even 69% is huge. Now, on Ethereum, we have right now 950% or something. Whatever that next chain is going to be, well, Gnosis I'm not that sure about, but if it's going to be Pulse or Hoodie, I'm pretty sure the APY is going to be through the freaking roof. Because Pulse may be through community and Hoodie through easy staking. So Hoodie will likely be in the thousands of percent. Now, Ethereum, Sepolia, not so long ago, was about 20,000%, right? Gradually declining. Single staking APY is already impressive. So the user clicks on that, right? Well, sorry. Clicks on this or clicks on that. Like, we need to make it clickable. We need to make sure the user understands that it needs to be clicked. Another purpose for the market cap, for the landing page, is to show cumulative market cap at the very least. Now, what is a cumulative market cap? Cumulative market cap is we're just adding market caps of every single ghostDAO, okay? So far, you can put your guesses of how much the market cap is. Now, we have 3 chains live. Hoodie is outdated, but still. We have Hoodie, Mortar, and Sepolia. Without looking at it, without checking ghostDAO, you can drop your guesses into the chat of what is the total market cap right now, okay? And I know the rough number. But let me tell you something very interesting. If we want to be on the first page of CoinGecko, CoinMarketCap is, have some censorship. For example, Olympus DAO, despite market cap of $300 million, is on God knows what page. It's not on the first page, but it's supposed to be. But based on CoinGecko, for example, ranking, there is not censorship a lot more censorship resistant, right? In order to be on the first page, your market cap has to be about $450 million, and you will be on the first page. And if you're on the first page of CoinGecko, and CoinGecko has massive traffic, CoinMarketCap is definitely the leader, but CoinGecko, we check the traffic, is about 4 times lower. But it's not like 100 times lower. CoinGecko is still a very, very go-to source. I'm not sure how we're going to be ranking on CoinMarketCap. They're probably going to just censoring us, just like they're censoring Olympus, just like they're censoring Pulse. But with CoinGecko, we may have better luck. I definitely have better luck. So push your guesses. What is the market cap already for Hoodie, Sepolia, and Mordor? You'll be I'll then reveal it to you, and you'll be pleasantly surprised. Okay. So the total market cap here is needed in case CoinMarketCap decides to be pain in the ass, and for everybody to see that this project is bigger than most of us think. It's already bigger than most of you guys think, even on testnets. So wait a second. I think so. User access. 1 sec. Let me just move it. So user access said, 10 million. Haha. No, 10 million is just Sepolia, guys. 10 million is just Sepolia alone. It's already like 8 mil with massive substance. It's way higher than 10 mil. Way higher than 10 mil. If you have more guesses, please drop the guesses. I'll reveal by the end of the call. All right. So now, so the user will be driven by the APYs, by single APYs. So there's ideas to maybe put e-ghost prices as well. Maybe put the treasury balances. Maybe put the launch dates. Maybe have some bubble or hover over that opens up additional stats, or maybe not. Maybe just percentages. So the user clicks on that, and then the user is redirected to the DEX. The DEX is already changed physically since yesterday. I don't have a slide on that, but the wrapper is integrated into the DEX. So we may be getting rid of the wrapper. So the wrapper may go. The team has done this without asking anybody. They thought that was a good idea, and I think that's a fantastic idea. So the wrapper may go, and you can already wrap via the DEX. You can try it out already. Now the DEX will be renamed to Swap, by the way, I think. Just to not to make so we'll have one less of a menu in the left panel. Another thing that we're thinking about is that right panel on the ghostDAO when you open it up and you have your balances, right? So that panel will also have not just that you're connected to Sepolia, but also that you're connected to the Casper via the Ghost Connect. So we need to rework Casper Ghost Connect for that a little bit, right? Here's the thing: functionally, no changes. It's just user experiences. It's just UX. That's the weird freaking part. So the weird part about this, functionally we have everything already, but the UX takes so much more time just to make it more usable, potentially for somebody, or at least more, more direct pathway. That here we'll essentially have reach what we don't have right now, the balance, right? So you just bridged, okay? It kind of went into limbo. Right now you're just hoping for the best. You're checking your ghost time, making sure your ghost went through. But here we'll have that Casper balance. So you bridged it, you will see it on the right panel, right? So yeah, it will disappear from here. Let's assume Casper is 123 Casper, right? So 123 Casper will be bridged. It will disappear from this side, and then it will be added here. Okay, so it's possible functionally. We have this information. We just need to integrate it properly. So it's going to be a Ghost Connect integration. Now, if you don't have Ghost Connect, that's a bummer. You need to download it. We'll be upselling you to download it, right, for you to see this balance. There's a question about what about some arbitrage plays that highlights arbitrage opportunities. So we thought about that, and the best answer to this is still under consideration. That's definitely something I was pushing for before. That's something that recently Cosmos has been pushing for very aggressively. But I think my view changed. First of all, arbitrage is the second best activity. The first best is bridging in. Secondly, arbitrage opportunity needs to be earned by every user. So if there are any discrepancy in prices, those discrepancy in prices alone are not necessarily substantiating the arbitrage opportunity for many people. Some arbitrage depends on liquidity. Some arbitrage depends on essentially TVL on the pair. Some arbitrage depends on backend levels, right? And for the arbitrage, kind of an idea is to maybe include all these numbers in like in hovers, right? Like to help with the arbitrage. Cosmos had some ideas about like putting like an asset, like this, like imagine like a like a drop down here for an asset like eCasper, and then like all eCaspers are updated, or like I don't know, sCasper, and then all sCaspers are updated, right? And then like APY, all APYs are updated. You thought about that idea, like on the lending, and then you click on that. So maybe that's something we'll be kind of engaging as well. Would be nice to know what you guys thinking, obviously, about this. Permissionless Ghost said 270 million. Yes. 270 million, that's around that, right? Like it's a little lower. So we have Hoodie at 200 million plus. Then we have Sepolia, and then we have Mortar. So together that market cap is 200, almost 300 million. And once we reach 450, we'll be on the first page. Okay? And it's not that fucking difficult apparently to get there. It's difficult, but not that difficult. So that's interesting. So permissionless Ghost, nice guess. Permissionless guess, we need to show the rewards for double staking and liquidity pools. The ROI, the rationale for user A and user B to conclude it never makes sense to sell, show them the money. Bingo. Exactly our thoughts, which we finally came to realizing. So now this staking, right? So when the user will go to the staking, again, those are some ideas like boost APY, staking, like this will probably go, and maybe that's a little bit too much. By the way, this here will probably go as well. Those like liners here, like maybe we just need to move them somewhere else. But on the staking page, you'll have the opportunity to stake with single staking, but you also will immediately have an opportunity to double stake. And when you double stake, so an idea for you, just to give you some numbers. On Ethereum, single staking is going to be to 1,000%, roughly. Let's round this 950, but let's round this to 1,000%. Bridging APY currently is 1,000%. Yes, I get it. Validators don't get that percentage. Why? Because of massive Casper balances not staked. But if those massive balances are staked, it's 1,000% APY. It's kind of it's on validators not to. It's on Casper users not to stake more, right? Like most of what they are holding passively. But if it's like all kind of ideal numbers, the realistic APY that has been received by Ghost, whether by validators or by Treasury, cumulatively, has been 1,000% APY. Annualized to date. That's real. That's absolutely real numbers. So this double staking, while single staking will show 1,000%, double staking will show about 12,000%. If I'm a user who wants to stake, which one will I pick? 1,000% or 12,000%? Thing is, we don't feature 12,000% anywhere, but it's real. Like, and then kind of the crazy thing is, how come we're not featuring it? That was like we absolutely should be, and of course we'll kind of the idea is to finally start doing this, right? So if this is 12,000% and they double stake, they get redirected to the bridge and they can bridge, and the bridge will be reworked and redrawn to the point where the user understands that by bridging they actually do earn double staking. Of course, when they bridge, we need to create a connection between ghostDAO and Lightnode. So there's a more or less easy way to nominate somebody and therefore actually take advantage of the double staking APY. Okay, so that is definitely another piece that needs to be added. But that's why we are reworking everything. That's why I put in all sleep, pull in all-nighters, because it's not a simple thing of just adding the APY somewhere and that's it. It's figuring out the entire user journey and making it more or less flawless. Because the user needs to be downloading Ghost Connect somehow. The user needs to be being able to buy the bond, being able to swap, being able to stake. The user needs to be reminded that when they do every single action, the APY is there. And the user needs to then be able to nominate to actually take advantage of the double staking. But I think that's the proposition, guys. And it really resonates with me now because all the liquidity will be sucked into the Ghost chain, and the user will also be getting double staking, which they do, right? Now, this is going to be the rework of the bridging. So all that information about the validated stuff, that will be moved to the Ghost Lite at some point in time. The form, that bridging form that you guys have access to right now, will be reworked to something like this, where you can bridge through. So we have an idea of maybe creating some routers where you can just bridge through directly. Not Casper token to Casper coin, which is like the only option right now, but actually, you can bridge from Sepolia to Casper coin. You can bridge from eCasper to Casper coin. You can bridge from Casper to Casper coin, right? Stuff like that. So I think we're going to be introducing those routers. So if you guys are lazy Those essentially guys who, whatever, some users who lazy, don't want to learn about the protocol, whatever, or just it's too much, right? I think we'll be adding the function of like single click bridging in order to get a double stake. So you have ETH, you just put the ETH here, put your you put the final destination of Casper, which is going to be pre-filled from the Ghost Connect. So you don't need to copy paste anymore. It's going to be just from Ghost Connect, like pre-filled. And then you bridge in. And the backend just does it for you, right? So swaps from ETH to wrapped ETH, from wrapped ETH to eCasper, from eCasper to Casper, and then from Casper to Casper Coin. So all those 5 functions done within a click. The team is not against it. It seems like, okay? Including myself. So if that's what's going to be, then maybe that's what. So of course, like that's functionally we have it all. We just need to do the UX properly. And of course, to incentivize the user, like 69% APY if you do that double stake. So the APY will be changing depending on what your input asset is. Your exit asset will always be Casper coin, for example, right? And we'll introduce how much, what return you're going to get after a year, stuff like this. Like you have like whatever, you have like 10 SEP ETH, how much Casper you're going to get, how much you're, what's going to be the Casper after the APYs and stuff like this, like the fees, everything. So some type of routes, like that is why it's not as easy as it seems like if you introduce this. All right, last question. Aside from stability of protocol from user XS, aside from stability of protocol, what benefit will users and or validators get from dollar flow into the treasury from bond proceeds? Well, bond proceeds give you everything. So, okay, let me just quickly demonstrate what bond gives you. And that's a good question. Bonds is the bread and butter. I more and more believe that bonds and bread and butter of the protocol. So without the bonds, let me tell you what you don't have with. If you have no bonds, what happens? This TVL happens without bonds. Bonds on Mortar not as active yet, so we only have 1,000 TVL. So it means the price has lots of sensitivity, and therefore, when somebody sells a little bit, that may trigger a sell-off panic. So, bridge. Sorry, let me so not bond bridge. People, one more time. So what's the question? Question is, aside from stability of protocol, what benefit will users and or validators get from bridge proceeds? I mean, listen, bridge proceeds is like the revenue. Like this is the only sustainable revenue outside of DEX fees that this industry will ever have. Now we are learning that RPC endpoints provide some type of stability, like maintaining the infrastructure, like pay for servers, right? Like from Titan builders, from that project that I showed earlier, right? So bridging is like, perhaps let's like not oversimplify it like this. So Aave, for borrow lending, so clearly the business model is to earn money on borrow lending difference, right? Discrepancy. So, from lending, from offering credit, right? So that's Aave and Compound. Okay. Now MakerDAO introducing sustainable fees by introducing decentralized and so far not traced dollar, right? Pegged to a dollar. So algorithmic stablecoin pegged to a dollar. So that's the use case there. Then of course Uniswap, right? And SushiSwap, DEX and PancakeSwap, DEX fees, right? So that's sustainable. Then Infra with Titan builders. Okay. Infra Alchemy also offer revenues, right? But for in a centralized solution of providing RPC infrastructures. But then obviously we have some chains that do offer transaction fees like Ethereum and Tron, where transaction fees outpace inflation. But then we don't really have a bridging solution right now that is profitable. And the idea is for Ghost to become one, right? So this is like just another super straightforward use case where we steal revenue from sexes, right? Like literally from sexes. And sexes we can see earn a lot of freaking money for bridging in particular. When I say bridging, every single time you swap from Polygon Matic to Ethereum, that's a bridge transaction. Every single time you swap from Tether on Tron to Ethereum, that's a swap transaction. Every single time you swap between Bitcoin and Ethereum, that's a bridge transaction, right? So it's all bridging transactions that sexes decide to do internally, and we do here. So the massive idea here is obviously just to earn massive revenue, and the revenue will be completely disconnected from anything as far as gold supply, the total supply of eCaspers or backend or anything. Like it's going to be completely disconnected. Like imagine like revenue is such a smart path towards monetization and I'm not sure how we got to it ourselves. It's just luck. I don't think we're that smart to come up with this. It just like was serendipity that we got to it. All right, so aside from stability, love the simplicity of routers. Be lazy. Well, so we cannot do it. We cannot oversimplify it because we still want you guys to play with bonds and stuff, and all the community members just to play with bonds. If everybody just does, bridging, double stake, and bridging with one click by passing bonds, it may not be beneficial for the protocol. So it has to be a nice balance. Permissionless Ghost. What does Staples call it? The easy button. Okay, thank you. Well, you clicking for Permissionless Ghost. You're literally inspiring us for this too. Okay, like I'm not gonna lie. Okay, so thank you for that. Isaac says people just need to have a visual of what's happening at each stage along the way. Essentially, yeah, we just need to kind of say, hey, listen, if you do this, that's what the APY is. If you do that, that's what the APY is. So the idea is potentially translate every single activity from numbers to one variable, and that variable may be APY. Finally, and let's wrap this up, from Permissionless Ghost, visual on the magic button as long as it's not hourglass like Microsoft Windows 98 or Microsoft Vista for that matter. Thank you so much, guys. Really appreciate it. See you guys next week. Have a good one. Bye.